as long as interest rates remain down here at these absurdly low levels, then people are going to keep crowding into the high-yielding fixed income alternative stocks, like so many of the real estate investment trusts. But what do you do with a real estate investment trust with a bountiful dividend that reports a quarter that the stock market seems to dislike? That's the question I got to ask with EPR Properties, the company formerly known as Entertainment Properties Trust, symbol EPR, a real estate investment trust that owns megaplex movie theaters and adjacent properties from retail centers to charter schools. EPR sports a gargantuan 6.2% yield, and the stock has given you a 54% return with reinvested dividends since we last spoke to the CEO way back in October of 2011. However, last Thursday, EPR reported after the close, and while the earnings were in line, the revenues came in slightly below expectations, and the company's movie theater holdings weren't as strong as some had hoped. In response, the stock tumbled from $60 down to $55 on Friday. That's a 9% decline in a single session. But I think a lot of that decline might be because EPR had run up so much going into the quarter, rallying 6% last Thursday on no news. So is this the pullback an opportunity to buy into weakness, or is it indicative of longer-term issues that we've got to be concerned about? Let's take a closer look with David Brain. He's the president and CEO of EPR Properties. Hear more about the quarter and where his company's headed. Mr. Brain, welcome back to Mad Money.
Thank you, Jim. Great to be with you.
All right, David, typically I don't ask CEOs about the action in the stock, but it was kind of nutty. The stock went up big the day before and then down big after. Was there an error in trading?
You know, it almost looks like that, and we have no explanation, no contact to the company about it, so I don't have anything to offer you. But yes, the day before announcement, it ran up big in the final half hour, very oddly, and then it came down the next day, and it looked like a reaction to earnings, but really, it's very much in line with the 30 or 60-day averages. So it's very, very odd, and I don't have a lot of explanation for it, really.
Okay, good, because sometimes what happens, if you put yourself in my shoes, I'm saying, all right, well, what went wrong? What went wrong? And I go through it, and pretty much everything was telegraphed. You said that the summer wasn't necessarily a great slate of movies, but you did well. You've got this casino property, could work out. There were no real surprises. I just think that sometimes what happens is you have a stock that doesn't trade a lot of volume, and someone makes a mistake, or someone buys a little more than they're supposed to, or a broker put the order in wrong. But as far as you're concerned, when you canvassed thing, it's just what I heard, right? It was really nothing to move the stock.
Exactly, Jim. And, you know, we trade about 400,000 shares a day, and we traded 2 million in 2 days. It was just something odd about the volume and traders right at that time, and I don't have much to offer you here, unfortunately. But as you said, the company is healthy. Things are on plan. Dividends in great shape. Company's in great shape. Just got upgraded during the quarter by Standard & Poor's. So, you know, I don't have anything negative to offer you.
But that's why I'm so glad you came on, because I'm looking for anything north of 6 that's quality. And sometimes there are imperfections in the market that create the opportunity, and that's what this was. Now, I know that there's some people who said, well, look, the movie slate wasn't that good. But clearly, just because you are a megaplex relation to megaplex, that is not going to determine your cash flow.
Right. We're a landlord to a lot of theater operators with coverages of about 175 to 185. And really, with the variable cost structure, you get a 4-6% dip in box office like we have, and it's really not an issue at all. It's not an issue at all to the landlord. To the operator, a little bit, but the
Right.
coverages are still extraordinarily healthy, so there's really nothing there.
And we're big believers in the staycation. I know, because I spoke with you last time about it, because we happen to like Cedar Fair very much. We like 6. We think 6 had a weather problem, honestly. But the entertainment complexes you have are doing quite well, right?
Doing very well, doing very well. You know, we're in the water park season. We've closed the ski season. It was a very healthy year. Water park season looks very good this year. So all is on track and in good shape in that regard.
Do you think that the Concord property that you have is just a kind of an option, an upside call option on what could happen? Because I don't even think good news of that property is in the stock right now.
I thoroughly agree with you. It's not in our guidance numbers, and it really is just an option. It's like as you said, it's kind of like a call option on a fairly unique piece of land that we already have paid for that hadn't been earning us anything. It's fully baked into our numbers from an ownership standpoint, but not from an upside return standpoint. So it's really, it's just opportunity value.
And the charter schools, are they still, in New York, they continue to proliferate. Nationwide, is that just a good landlord business still?
Nationwide is very strong. Demand exceeds supply broadly. We're building 15 to 20 schools a year. Very selective markets, but it's very healthy. And 2 new states in the past couple of years have additionally passed or enhanced charter legislation. So it's very strong.
Well, this is a terrific opportunity. I'm so glad you came on, because I said, sometimes I feel like I'm just missing something. And I wasn't. It was just an erratic trade of a very good long-term story that yields 6%. Thank you so much to David Brain, President and CEO of EPR Properties.
My pleasure. Thanks, Jim.
Guys, opportunity. You're looking for yield. I know everyone I spoke to this weekend at the fundraiser I gave for the Quad Lever, they want yield, yield, yield. I present you EPR. A very safe situation, a really good story. Stay with Cramer.